and we can get started right away. While he's doing that, I want to say hi again. Welcome, everybody. For those that don't know me, my name is Robert Patyk. I've known Ed for a few years now. We were bumping into each other when we realized a lot of people didn't have a good clue what they were doing when crypto was relatively new. It is still relatively new to this day, and we are the early adopters. So we're trying to help people navigate safely the shark-infested waters because there are sharks. We have to realize the reality, and what we're doing is having people the lifeboat to help them survive. So this is great that we have these sessions. Thank you, Ed, for such a wonderful, introduction and all of the tools that you're making, and you're really putting your heart out there to help everyone succeed as much as possible. It's all about creating a community. We have so many different great mentors here that have excellence in different fields, like Ed mentioned, security, different things. So definitely, I do love this topic. When to exit and take profits. That's part of some of the most stressful things that you can come across when a trader. Even when you have a successful trade, you can get out too early and then beat yourself up for not holding a little bit longer, or perhaps you should have gotten out and then you didn't. So this is something where mindset is very important, and definitely we have here, Ed, some coins. So please feel free to fill out this poll. Which coins interest you the most, and or feel free to type in the chat any other coins that I may have missed that you want me to quickly do a rapid fire over. I'm going to pick just random 20 coins and go as fast as I can through them, and then I'll leave the door open for another 5 or 10 coins. So I'm not going to spend more than a minute on each one. I'm going to go as fast as possible, maybe even 30 seconds. So yeah, definitely drop them in the comments and let Ed read them out to me when I've got to that point. But yes, I do have to say something first. So when it comes to this, when to take profits, this is very important to understand. So what we do have here, I am going to mention that since we're on that topic, understand that for myself as a trader of 27 years experience, I have won first place in the world in a global stock trading competition at the age of 21. I have been well versed in what to do as well as what not to do. I have also made every single possible mistake you can think of. And this is an important topic that Ed selected for today's call. Don't underestimate it, because having a risk reward is very important. Understand how much profit can you make versus how much can you lose on any one trade. So this is a prior presentation we did at one point. We had, the top 20 mistakes traders make. This was just mistake number 17, which was, always try to make $2 or $3 for every $1 you lose. I do that for every single investment, not just in trading. So, that's very important to realize. In order to do this, you first have to have targets, right? So where are you going to get in? Where are you going to get out if you're correct? And where are you going to get out when you're wrong? And I can urge you highly to have those targets where you're going to exit if it's wrong, and where you're going to exit when you're right. And understand there will be days when you're wrong. No trader on the planet can be right 100% of the time. So get rid of that mentality that you've maybe understood from school, that you always got to be right. Realize when you are wrong, you're not going to get wiped out. Have stop losses. So if it were to keep lowering, and often people won't have a stop loss, they'll buy something at any moment, random time, and then it goes up or down. They think they'll make $1 or lose $1. What does it do? It drops. And usually people think they can only make money when it goes up. So we'll use that example. Price drops, and then they're like, oh, what do you hear often people think or say? Maybe someone like this. They'll buy the dip. I know Ed has a wonderful meme somewhere about buying the dips, and we're going to post those in our community. But then what happens? It drops even more, right? You ever experienced that? Then people reach out to me so often. This is why I'm bringing this up real quick. Rob, what do I do? Rob, what do I do? And often I have to say, I'm sad, but I have to say you should have listened to me earlier on, where you have a stop loss, because you determine where you're going to exit if you're right, where you're going to exit when you're wrong. And you do that before you even enter the trade. So you're going to look at the chart, see are those realistic targets, like Ed said, to both the upside and the downside. And then if you had done this where you exited down here, you could now repurchase down here. And if it goes up just a little bit, you're now in the big profit, which is much bigger than this tiny loss. So, even though you were wrong on the direction initially, you're still making money. So have a risk reward ratio. Always try to make more than you can lose on any one trade. And also try to not pick random times to get in. So for example, you have here resistance and support. You draw trend lines. You do, look at peaks, look at bottoms, and don't be the random person that does this. They buy at any random time when it's just whatever it is in the channel, because they don't even know how to identify channels, and they think, oh, it's going to go up, but it can go up and down just as much. So now what you can see is, this would have been a better entry. Now that you have the ability to learn how to draw resistance and support, maybe you can buy somewhere cheaper, get that $50 t-shirt for $20 instead, and have a downside target that's much smaller than the potential upside target, right? And likewise, you can also sell, because we make money in both directions as traders. This is another mistake that people often overlook when they're newer to trading, is they think you can only profit when things go up. Here you can see, if this goes up, I'm losing money, but if it drops, I'm making money. So learn how to do that. That is definitely a skill that is good to know. And absolutely, I had mentioned about the leverage. I agree that it is a double-edged sword. Don't scale up too quickly. Don't use too much of your portfolio at any one time. And understand that, this is definitely something that you can learn, okay? You can just, by plugging in, coming to this community here, you're going to learn a lot of stuff. And also, don't forget to bring your friends here if you do get any value from these calls. So I do want to mention that Ed mentioned institutional trading quite a bit today. So we do have, you can see a lot of stuff happening with institutional stuff. So yes, when you have a big wick of a candle, this is a candle here. And when you see that it is actually this thin line underneath the candle, the longer that wick is, that is what you're looking for. Those are institutional players typically getting involved. And even the body of the candle can be very big. That's also institutional traders, meaning big banks, whales, people with a lot of money controlling the prices. So do realize that whales don't just try to push the price down so they can buy it cheaper, okay? They profit in both directions also. So you have to understand that if you can make money where the things go up or down, now you can realize that they're actually making money on the declines too. It's a whole different ball game, and you can look at it from a different approach. So yes, leverage, I just got to mention also, it can be dangerous. It can also help you. So realize that just like driving a car, it can be dangerous. If you don't wear your seatbelt, if you don't drive the speed limit, obey the rules of the road, people do die in cars. And does that mean we should never trade or never drive a car? Absolutely not. In fact, you're better off having one. So, keep that in mind, that it is a double-edged sword only if you don't know what you're doing. So do participate in educational programs, get a mentor, help you cut the shortcut of learning for a long period of time down to getting results immediately, and invest for yourself, but not by yourself. That's all I'm going to say. So let's go right into this analysis here. But before we do that, I just want to quickly pull up a quick recap, just a minute of last week, what we had said, right? So we can see here, I'm going to put the sound. So here we can see what we had said exactly 7 days ago, okay, on these rapid fire calls. Actually, last week was a more extended version, and what we had said last week. So let's go ahead and just play it.
Now have a more bearish signal. Okay, I'm keeping the lines parallel, and we can see that this could perhaps go to as low as 30,000.
This is Bitcoin.
So I am making a bold prediction here that we at this time cannot rule out the possibility of Bitcoin hitting 30,000. If you combine that with the coin market cap dominance, where Bitcoin is tanking and steadily declining and trajecting lower, there is a chance it could continue on that path. If it does, it could easily hit 30,000 still. I'm going to turn on my moving averages here since we're with this first MACD line. So my target is very realistically about 40,000, and possibly even actually this down here. Wow, that's actually 20,000. So we can't rule out 20,000 for Bitcoin. And this is perhaps going to be recorded and watched one day in the future. So hello future, when it's 20,000 again, because I have been spot on quite often, but I do super bold predictions and still have high accuracy. Just realized that, we do have all the three moving averages down here, 2 days or a month and a week.
This is Ethereum.
So by the beginning of June, it is possible we could see Ethereum at 2,000. These are crazy predictions, 50% off, but we'll come back to this in a month or two, I guess. Okay, so that's not looking good right now. Let's put on the Bollinger Band. It is in the upper half of the house. Okay, so the middle is right here. It is right here right now. So there's a chance it could somewhat decline, if not go even further to the first moving average. So I'm not looking very happy here. I do see a potential fresh cross about to happen on Ethereum. I'm not going to spend this much time on all the coins. I'm just focusing on Bitcoin and Ethereum the most. But we can see that could be coming. If that does materialize, I'm known for pinpointing tops in the markets because I can see these things happening. Now, there's no guarantee it will, but this stochastics will happen first, which will drag the MACD to do a fresh cross and perhaps drag the RSI back to closer to 50. And always look at the number up here. It's currently 70. So going from 70 down to 50, I have to favor strongly the bear camp to the downside for Ethereum. Actually abort mission really quickly because that's not a time when I would be staking. Yeah, we can see that's not a good timing for Litecoin either. And although this one is, what do we have? A decline and a decline. And it actually hit perfectly that level with the wick.
Okay, so you get an idea. This was last week, right? So we saw Bitcoin. We had called it when it was in the 50s that it could hit 30,000 was the correct answer. I had actually given 3 targets for that. It was actually 40,000, 32,000, and 20,000. So those are the numbers someone had asked in the chat today for the downside. So yes, a lot of people took a hit. I am not one of those people. I did not take any hit for the last 7 days at all. In fact, we're showing people that I had made a profit. So this is something that I hope to stress to you, that this is something very powerful that we can do. And I have to give a disclaimer right now. So myself, Ed, and everyone else on this call is not making themselves out to be a tax advisor, lawyer, or a financial planner. Do reach out to a certified professional before making decisions. Anything we discuss before, during, or after this meeting is strictly educational purposes only, to teach you how to read the charts, do your own due diligence, be confident in your own decision-making abilities so you can actually be making your decisions, not trusting someone else. So we're not making ourselves out to be, we're not selling any securities, we're not giving any advice, and don't hold us liable for any decisions you make arising out of these charts, because they can change 5 minutes after you watch this. Okay, so be aware that we're trying to teach you, give you the skills that you can do this yourself. So with that out of the way, let's go ahead and let's just quickly now go into the charts, because I do want to show you that, you know, this is something very, very powerful that you can now do yourself. But when we're looking at charts, Ed mentioned something interesting. He mentioned super cycles. Okay, and I do want to just touch on that for 1 second. We do see here that we have also, let me go share my screen again. We got great turnout today. So let's share this. So there are a couple more mistakes I want to point out here. So investing only for the long term. So realize there are mini cycles on top of smaller cycles. So what do I mean by that? You may have a super cycle, and you can also have smaller cycles on top of mini cycles. So when we're doing the charting analysis today, I want you to realize I may be looking at only the charts and only right now looking forward to the next 7 days. But sometimes I may make predictions that are out 1 or 2 months. Okay, so we're doing both here. Now, again, these predictions are just for strictly entertainment and education purposes. Realize that you should be learning how to not just hodl, because, you know, this is something that you're going to miss out. As you can see now, what I saw a week ago is that by simply learning when to be on the sidelines, that counts as a position when others are losing money. And just learning when to be in and out could be already better than just strictly hodling or just staking. Also, you can go one step further. You can actually then learn how to profit in the downward direction, because then there's opportunities both up and down as traders can make. So now let's look at the charts. And the first one we're going to look at is, before we go into a specific coin, Ethereum BTC ratio, as we had touched on last week, we mentioned we're going to be doing. So I'm going to point up CoinGecko. And let's go ahead and quickly, sorry, not CoinGecko. Let's do, this is a better one. But the only reason I'm going to look up this website, CoinMarketCap, does have one feature that I do like here at cryptocurrencies. If I hover my mouse above cryptocurrencies and I click on global charts, we're going to touch on this every single week. We're going to look at the market cap dominance, because this is very important in terms of immunity, in terms of being delisted from exchanges for the best coin. So whoever's the high performer has a lesser chance of being delisted. And as we had mentioned last week, we're keeping a close eye on Bitcoin's lackluster support here, movements here. We had mentioned that it hasn't been this low for 3 years. Now it's even longer. Okay, so it just keeps getting worse and worse. During this time, when Ed and I were talking about the coin market cap dominance for Bitcoin going down to so close to Ethereum, we realized that we could have the flippening occur. This is still possible that the altcoin season will occur. The reason I'm pointing this out is because this is 50-50 at any given moment. Nobody has a crystal ball. I did say a couple years ago that it's only a matter of time that Bitcoin will be replaced by another coin. But when it's dipped so much, it can always revert quickly back up. And that would be perhaps an instance of buy the dip. However, it is also, are we getting into a harsher altcoin season? So that's not something I want to speculate on, but I will talk about the other charts of every coin. Just know that that can be dethroned by this single-handedly if Bitcoin continues to lose steam compared to other coins. So now we can go into looking at the individual coins. Real quick here. So Ed, if you can give me like a quick warning when we're low on time. So
Sure.
Yeah, so we're going to go now at the coins. I'm going to start obviously with the highest market cap coins. I am going to let Ed interrupt me at any time if you got any favorite coins to look at. All right. And so what we got? Bitcoin. All right. So there we go. Where were we at last week? It was the 12th. We got here. So around, it was in the evening. So let's just say here, we were selling and we were saying, you know, be careful. We were in the low 50s and we're going down to, we said 30. Indeed, it kissed 30. All right. We actually, I think I said 32, but 30 is definitely it touched. So that was an opportunity to get some buying there. Definitely, because it is cheaper. I'm not going to go so far as to say ready to go back up. However, I see now for the bulls, they have now a better case. Obviously, instead of a $50 t-shirt or a $54,000 t-shirt, you can get it for $20 or $30 or $30,000. So definitely that's cheaper, better timing to be buying long term if you're looking to go up. Again, this is not financial advice. This is strictly just talking about how the price has gone down and it's lower. So it's obviously you can buy almost twice as many now. So what we're going to look at is realize, okay, Bitcoin. I'm going to pull up some more indicators here. Let me pull up my arrow. All right. So you can see here when we were doing this, first of all, this okay, I want to show you the Bollinger Band. So I'm going to use the same indicators usually on these rapid fires to keep it quick. But Bitcoin, I'll give it a little bit extra time, in Ethereum. So Bitcoin, I'm going to turn off these moving averages, which I'm usually using the 50, the 100, and the 200. And this Bollinger Band you see on the screen, anytime the price is outside of this Bollinger Band, I like calling that as a joke, free money. Okay, so as you can see, 30,000, if someone had asked me at that particular moment, you know, what I think, and I would have been like, absolutely, this could easily go back up to the the lower Bollinger Band. All right, it typically goes back to the middle Bollinger Band. So here again, you see another wick. That was free money, and you can also see them sometimes above the. So that was easy, free 30 grand going up to like 36, 35 grand, right? So that's quite a big jump. Right now, we're absolutely in the middle of the Bollinger Band. That tells me absolutely zero direction, 50-50 still, despite having fallen. What I am going to do, though, is insert the 50, the 100, and the 200 moving averages. We could actually have seen this coming because the pink line crossed below the black line. The pink line is the 50 crossing below the black. That is considered a death cross. All right, that happened right before I had called that sell. All right, that was part of my reasoning why I saw it coming, a huge decline. All right, and as you can see, the pink line, as it remained below the black line, that allowed the price to keep tanking. It is still there. However, there is a chance it can start heading upward, but it's got a while to go before it crosses back above that black line, which would encourage buyers. So there's a lot of pessimism still in the markets, even for no matter how people use the moving average. However, how I like to use the moving average is the further away I am from it, the more bullish I am. So that is the most bullish I am on this entire chart, going back, let's see here, almost a couple weeks. Okay, so if there was a time on this chart in the last couple of weeks, now would have been when I was the most bullish, simply for the fact that I'm the furthest away from this moving average. Okay, they treat them like a magnet. That's how I treat moving averages. Okay, in terms of everything else here, I see some bullishness. I do see from here to here, it is somewhat sideways to slightly lower. And if I replicate that here, I'm going to use straight lines because it's being recorded. We can see that our target is around 45,000. All right. So just based on the divergence alone, we saw the price respect that level quite much until it diverged away. And now it may converge back up to the mid 40s is very reasonable. Currently at 37.99. All right. So definitely that is somewhat good news for the bulls. I'm using 1 hour candles. Let's take a peek at the 1 day candles. All right. Okay. So this is a different story here. So you can see, yes, I'm still bullish in terms of these Bollinger Bands here. Going back to the middle is the path of least resistance. That's 50K is doable. However, there is the bad news, which we saw last week, materialized. So I had drawn on the call, a head and shoulders. You can pick your shoulder. Let's just do this one here. The head, the shoulder. This is one pattern we often use. Actually, we're below the neckline now. So this is not good because of this receding neckline. We just barely crossed it. So that means we do have the possibility to go more down. Let's see how far down. If I go the height of this head here, that is the target. So if I do another one, let's actually not draw that. Let's draw an arrow. All right. And I'm going to drag one of those down here to below the neckline where it just crossed over. Boom, we got 30,000. Now we did touch 30,000. That's how we got that target. Okay. And as soon as it hit that target, the pattern is finished. You turn it off, you delete it, it's 50-50 again. Okay. And typically what we have after something goes off a cliff, we have a dead cat bounce. That's the terminology day traders use. I didn't call it that. So I like cats. Okay. So don't hate me, the animal lovers. So, however, I'm seeing something interesting. Now that we're a week later, guess what? We may now have a formation coming of another different head and shoulder here. If we can call this entire experience we've just had as the head, we may now see a bounce like we're starting to see already. I may see my 50K or 45K, all right? Anywhere between 40 up to all-time highs, it counts as a shoulder. So it could be here, it could be here, it could be here. I don't know which one it'll be yet. It's too early to say. What I'll use is the other indicators to indicate that for me. However, it must stay below this line. If it stays below the all-time high, then it's an intact head and shoulders. If it crosses above, I'm no longer seeing a head and shoulders. I become extremely bullish at that point. So 65K or higher, I would become very in favor of the bulls. They'll have squished the bears. But for now, the bears are completely in control on this massive head and shoulders. All right. So what I'm saying is we would actually draw a line here, would be the neckline. Since 30K seems to be the number of the wick. Or if we use the body of the candle, we could see about 38,000 is the where the shoulder will begin, the right one. Okay, so we're going to be probably good to go from here, just from what I'm seeing. But do realize we have some trouble coming in the big picture. This is like a whole year on the screen that I have. Okay, so that means a couple months. We could see a month of going up, and then a month of going down or two. And when we retest that neckline, we could see a massive decline. That would be brutal. I don't think, I don't want to say we can't rule it out. It's possible. Touching the neckline is extremely possible. Going below it is not easy. It's 50-50. But if it drops, then it can have just a big as drop as the size of this head. which means that would wipe out like pretty much Bitcoin down to zero. So replaced entirely by a central bank digital coin, maybe. Hello, future. So anyway, so that's not good. Another bad news here is, again, the moving average, the pink line. It's not crossing below the black line, which is a death cross, the 50 crossing below the 200 moving average, but it is starting to cross below the 100, the blue line. When that pink line crosses below the blue, that will open up the door to some panic, okay? And that hasn't happened yet. It is just about to on the daily candles. So that will continue being a negative tone. I would be on the sidelines actually on this one until I see that play out. But I'm slightly more in favor of the bulls right now, simply because the final result is we're at the very low edge of the Bollinger Band. Why am I picking on Bitcoin so much? Because it can control the rest of cryptos pretty much. It is the dominant coin for now. Let me actually show here. So there's the indicators. So down here, this looks great. Okay. So we are in good shape here. I do have to side extremely well with the bulls. But while I was saying that, I drew this in my head, which I don't like. Okay. So you can actually see why it came down to there. And so we still got some reason for the bears to have hope. Okay, so this is more of a neutral thing for me. I would stay away right now from Bitcoin. Just watch, unless you have positions, use stop losses, of course, but that's just the education purposes only. So here, Ethereum, look at that nasty red candle. That is definitely a institutional candle. The whales are out and playing. So let's go to the hourly candles. Let's have a look what happened since we called this last week on the 12th. Around here that it would go down. So we are seeing stochastics is neutral. RSI is almost neutral near 39. It may go up slightly to 50, not much. This could be good if we get a fresh cross, meaning that the blue line crosses above this red line here. That would be a nice fresh cross. That would give us some hope. However, it is already near the middle Bollinger Band. The only thing that's really dragging it up is the fact that it's this far away from the moving averages. 3,500 is possible, but it'll definitely pause along the way at 3,000 if it can get that high. Okay, and I would be slightly in favor of going upward here also. This is quite a large dump we've seen, and it stinks, but there's, always silver lining to everything. You're fertilizing the soil and then maybe help grow the other coins. So if this can, like after a big decline, you can see, that you appreciate the sun more after a rain. So there's hope here. So let's see USDT, Binance coin. Binance coin, we knew what happened there. They had some struggles. I'm just now reiterating this stance here from this bottom to this bottom of the MACD. If I repeat that, that's somewhere here. That makes me bullish. We definitely can see here that we have 440. Okay, 440 to 450 is very reasonable still for Binance coin, even though they're going through some crisis. And this could actually be in the form of any increase we see now going up. We could see it come down, and that would be normal. So let's say the stochastic goes up, then it comes down, and then it comes up again. So that will form this shoulder, all right? This natural rhythm of the market. Everything moves in cycles. This will then cause this MACD to cross over to the upside, which will be bullish. And we can see it then shoot up because this will be a head and shoulders. All right. So we can see the target. Actually, I'm going to measure that really quickly for you because that's important. And I can't see it with the naked eye. So let's measure that target. If we did have a head and shoulders roughly where I drew it at 400, which is a psychological number, I'm not guaranteeing anything, but I'm also not guaranteeing definitely that will, create the head will go up to 400. So let's see that here. So if we go here, then this could end up going to 500. The second moving average, the second psychological number, 500, and it's also the height of this head, of this hypothetical head and shoulders. I'm not saying that's where the head will be. I'm just kind of guessing. All right. So it's near the middle of the Bollinger Band and is somewhat near where the previous head began. If the head actually begins higher, all right, so then what we do is actually the neckline would be sideways, perfectly sideways. Then my target would be even bigger. Then we could go to 520 and actually here at 550, and then this black line, which is slowly decreasing. Keep that in mind. So between 520 to 550, we could hit that if we have a head and shoulders that has a perfectly sideways head. Okay, so this shape here is perfectly sideways. If that happens, then that could be more bullish. But that's not a guarantee. We may have just a smaller head and a smaller shoulder. So typically, this is what I would remind, that when you have a head and shoulders, you could actually have two overlapping. So there'll be a small one first that will have a breakout to there. And then what will happen, I'll change the color. We'll have a new head and shoulders. We'll have one here. And this whole thing could be the head, followed by another shoulder. And now a bigger neckline, bigger head, going all the way back up even to 550, even maybe 600 again for Binance Coin. Let's move on. Let's go to Cardano. I know a lot of people talk about this one. We can see, as I've been saying, when we have a sharp decline, we expect a sharp move back up. A sharp move higher, sharp move lower. If it goes up slowly, it's less likely to have a decline. So, it's just basically people profit taking, or people being greedy when people are fearful, or fearful when people are greedy when they're smart. Okay, so they'll move it back when they see that opportunity. And I like to be the little fish underneath the whale. I go with the flow and I see what the big boys are doing, and then I will just copy them, right? So the point is, when they move, they push the price down. When I move, I don't. So retail traders, by the way, they don't really influence too much their decision making, as much as people may think. Just do you focus on yourself, because you may be tempted to make crazy moves thinking you know what the whales are doing. Don't try to guess what the whales are doing. Just watch this analysis, realize where the neckline is. If it can break the neckline, we could see 2.00 for Cardano. We would have to break this neckline. I'm going to draw it. It's exactly here. So let's now zoom in on that. Actually, let me clear this. I'm going to draw it. I'm going to zoom in. Let's go 15 minute. Get it perfect here. On the 15 minute, if I draw the neckline, we need to cross over this line to be extremely bullish. Because what's going to happen is, this is your price for suffering through this. If you held on, you will be rewarded if it can break the neckline by a much larger amount. It's off the charts. Okay, so now what I'm going to have to do is scrunch this together. And actually, I got a black line up here for some reason I drew in the past, which tells me that's my target, 2.4. Okay, by the time we would break that, we'd probably hit just under, maybe 2.3 to 5. Let's just call it safely. So that is possible. And let's see, is that even an all-time high? Not quite. All-time high, I'm going to put a line in, horizontal here. That's definitely going to be resistance. Look at that confluence. So I do see a couple targets here. If we can break this head and shoulders, we've now created the right shoulder even. Perhaps right now I'm quite in favor of the bullish, that we will at least get to the neckline, aka this black 200 period moving average on the 15-minute candles. At that point, it's going to struggle, decide what it wants to do, either go down or cross that line. If it can successfully cross above that yellow line, which is the neckline of this head and shoulders upside down version, we're going all the way up. So there's in the path of resistance is only going to be two lines, which are here, number 1 and number 2. So those will be 1.99 and 2.2. Let's put that right in the middle, actually. 2.2, yeah. 2.22 and 1.99 along the path to 2.45 is reasonable. If we can break that yellow line, currently it is sitting at 187 and slightly rising, depending how long this takes. Between 187 and 190 is this yellow line that we need to cross above to be released the hounds, like, out of the gates. Okay. So I do favor the bulls here. And right this current moment, This is a shorter time frame, so this is going to come down and reset, but that's normal. You're probably watching the recording of this, so I'm going to zoom out to the 4-hour candles and see, okay, not bad. Okay, we got RSI is very low. That is great at 35. It can easily go up to 50. It deserves a green line, so you're not confused. Okay. Also, this is somewhat neutral stochastic. That's not wonderful. It looks like we're not out of the gates yet. I would like to see this MACD slow its momentum and go sideways, right, before it can start heading back up again. So that could happen right now. It's not a guarantee. I got some green lines over here. Let's see where they are, because they're going to give me the final say what I think about Cardano. And we have them at 1.31 is a great floor. 1.21 is another one. And I'm actually going to put a higher one. Let's put one in here. Let's make it green. All right, so that's at, what is it, 147, 148. So that's not bad. It's near this black line, the 200 period moving average on the 4-hour candles. And you can see I'm expecting this to fluctuate within this range still. And what it deserves, quickly before we run off, is a Fibonacci. Let's go from top to bottom, since this is such a clear cut drop. And then we got our targets. I'm going to use ignoring this major wick. And just have a look at what do we see here. What are the numbers? So we can see here. Let me just move this over so you can see it. I'm gonna use the body of the candles, and the body of the candles is here. All right, so we got 38% Fibonacci, one of my favorites. 1.836 for Cardano is my target. 1.836 for Cardano, followed by 195. Okay, those would be my targets. I would be exiting. Yeah, those are quite reasonable, actually. But then what I'm going to do is quickly put in another Fibonacci. I'm going to use the wicks this time. And I'm going to put them in all the way to the bottom one, which I need to fit on the screen first. And what do we got? This time, we've got 1.52 and 170. Okay, those are also important levels and important targets. Okay, so that's what we got for Cardano. Currently, it's at 155. So DOT, actually, did we look at the lower indicators?
We can probably do, DOT will probably be the last one.
All right, sounds good. Yeah, have a look also if there's any questions. But yeah, these are absolutely, as we can see, remember what we said, free money when it's outside the lower Bollinger Bands. It is quite low at or near the bottom, if not below it right now. Plenty of room to the upside, plenty of hope here. Near this middle of this Bollinger Band, so this blue background here, you can see that range here is where we're at. The middle is the 20 moving average. Just to get back to the middle Bollinger Band is coinciding with all 3 moving averages on these 4-hour candles. So that's reasonable, okay? Very doable. $36 for DOT is doable. This is all helping with the RSI in this way oversold territory. But when disclaimer, watch the news. I've been pinpointing with Elon Musk talking about Dogecoin all the way up and all the way down, riding that wave. So, this is important to watch. So definitely, that's all I want to say. And just say this, I myself am doing, mentorship. I'm going to be showing you how to get it for free because I need some testimonials of people getting actual correct results with our analysis and with our education. We don't do analysis, we do education. So definitely 100%, no obligation. You can book a free trial with me. I just added some time to my calendar. You just got to go robertpatyk.com. Please do that because the spots will fill up fast. I used to charge thousands for teaching. This is a way to come in and get a no obligation one-on-one with me, free education, mentorship from myself rather. And go ahead, check out robertpatyk.com. Just click 60-minute meeting, book with me, do it right now before everyone else does. And, first come, first serve. So this is something I don't typically do, but I want to get some testimonials here going for us of people winning in our community so we can use that in the future. Please do that right now. And Ed, maybe you can share with how they can get a hold of our future meetings. I do want to announce a quick kind of a VIP only event for some of the people watching this to come on Saturday. I'm thinking of now launching Saturdays. So if you're interested, type in the chat what time works for you the best. Is it 12 noon, 1 p.m. Pacific, 2 p.m. Pacific, or 3 p.m. Pacific? Again, that's 12 to 3 Pacific. I'm picking which time is the best for Saturdays. Type in the chat right now so I can have a look what time works for most people here. And also, if you're watching the recording, you can also type what time works for you. So thanks, Ed, for your chance to, share some of the charts. I didn't have much time to cover even explanations why I see things, but I will be doing that on the next Saturday and even Wednesday. I will be going in more depth with more coins and more explanations so that you too can be, become a profitable trader like the pros and confident in your decision-making ability. So thank you, Ed, for your ability for letting me share this. We had a crazy, from the peaks, we've dropped 50%. And when I had said 7 days ago that we're going to see in the next 3 or 4 weeks, a drop of 30 to 50%, I wasn't sure it would happen in the first week. I gave it some room to breathe. But because it happened in 1 week, I got to now favor the bulls. That was a little bit too fast.
All right. Yeah. Thanks, Robert, for just giving us a quick, rapid fire update on like how different coins are going and where you think they could go. And so just for next steps, we will have another general session in 2 weeks. So be sure to sign up to continue to be within a supportive community. We also have a community group. This is for those who want to get deeper into trading. You want to learn more. You want to be more than just a hodler. You want to trade. You want to learn how to profit on the way up and down in the crypto market. So Robert and I, we do run a group called Crypto Trading. So you can see Robert's right here. He's right. So this is the community you want to be part of if you want to get our analysis in between the meetings, because if you wait for until the next meeting to see analysis, it may be a bit too late already.
Yeah.
And as you saw, Robert was showing one of his analysis he did at the last meeting, right? And how it became true, how he predicted the price would go down and everything fell down, right down to the dot of that target market. And if you want to get more heads up, right, this is the community you want to be part of. So that is Facebook.com. I'm just going to share it here.
Yeah, let's share that. And I'm also going to share my link to book with me a free hour because you don't want to mess up that opportunity. And definitely, if you join this crypto trading Facebook group, you will be able to stay on top of all future events.